Good morning, everyone, and thank you very much for joining me. This is the Crypto Minute with myself, Russell Shulman, Senior Market Specialist at FXCM. My email address is rshore@fxcm.com. Today is Wednesday, the 11th of May, 2022. And here is our high-risk investment warning. I'm going to keep this on screen for a few moments. It should read 11th May. Sorry, I sort of rushed across. I'm begging your pardon. All right, and here's our market commentaries disclaimer. Hey, Lisa, no worries and welcome. And Zanetta, hello again. Thank you, everyone, for joining. References MarketScope 2.0, and here is TradingView. I think we will use TradingView. I want to just do the. I want to suggest something with regards to a standard deviation here. But before we do that, let's just do an analysis on Bitcoin itself. All right, let's bring up my chart in Bitcoin. Where is this thing? Come up a little slow, beg your pardon. All right, I think just whilst I'm waiting for this to, while I'm waiting for that to pull up, let's just do a little bit of statistics. We won't get too involved with it. What I'd like to just suggest is that most distributions follow a bell-shaped distribution, something like this. And I mean, this is completely sort of a normal distribution. You may have a skew. You might have a positive skew. You may have a negative skew. Then you may have different sort of amplitudes and sort of frequencies. Forget about all of that. Let's just talk about very basic bell-shaped curves, and you kind of got a mean right in the middle. So what's your mean? That's your average. And then what you would do is you would measure your distribution according to what we call standard deviation away from the mean. Okay, so you've got 1 standard deviation, 2 standard deviations, 3 standard deviations, and most deviations away from the average, most, not all, most, tend to be 1 standard deviation away. So it's either going to be plus 1 standard deviation away, or it's going to be minus 1 standard deviation away. And the statistic, okay, when you punch it in and you start working out your sort of your intervals, your confidence intervals, it comes to roughly, not exactly, but roughly 34% of the time it's going to be towards your, somewhere between your average and your -1, and 34% of the time it's going to be between average and your +1. So 68% of the time we're going to be between the 1 standard deviation. If anybody sort of has any confusion there, just let me know. But the main point is that we are going to see deviations off of an average price. The question is, which instrument has the biggest deviation? Because the biggest deviation is regarded as the higher risk instrument. Okay. Having said all of that, let's bring up the chart. Here is our Bitcoin chart. There's a lot happening on this chart. There's a lot happening. Multiple scenarios that we can suggest, and the first one is what I think is the first one I'm going to suggest. I think is the the key target, in that there's this breakdown here. Okay, so we suggested this yesterday. This is breakdown from this rising wedge. The idea about a rising wedge pattern, a small rising wedge pattern like this, is what we call a continuation pattern. It's what we call a continuation pattern. In other words, the previous trend is expected to continue. The previous trend was down. We've now broken down, okay, and the target here. Now, in an article previously, we did, well, we're looking at 25,000 as a minimum, but I hadn't quite drawn the measured move accurately. Now, with regards to targets and forecasting, I want to make this statement up front. They're useless. Okay, targets are useless. They're either going to be hit or they're not going to be hit. It really depends on sentiment at the time. But in terms of economic technical analysis theory, you can use a measured move, and the measured move suggests sort of 25 as a minimum. And this is on a logarithmic target. If I change this to arithmetic, it's going to give us a different target. Yeah, it gives us a deeper target. So the theory that I've looked at doesn't really motivate one way or the other. Now, technical analysis is not the only analytical methodology that relies on forecasting. Fundamentals would as well, via discounted cash flows, for instance, to try and work out an intrinsic value. And whilst there is some sort of sense to discounted cash flow, again, it's going to rely very much on how accurate assumptions are. And the further out you make your assumption, the less accurate it's going to be. So it's not something that's particular to technicals. It's just the fundamentals seem to have a little bit more, not a little bit, a lot more of a standing in academic mathematics. What we can say for sure is that the breakout is negative. It's to the downside. We can certainly say that, and 25,000 I think is probably a reasonable target given the bearishness in the market. Whether it gets hit or not, I'm not certain, but the breakdown is what I think. The breakdown is obvious. What is certainly going to contribute to that target being hit would be the momentum, and that we can look at via stochastic. So if the stochastic hits the 20 and hangs around that 20 area, then I would suggest that 25,000 becomes highly probable. Okay, so it's all about now the pressure on the cryptocurrency. Clearly, if the stochastic turns up towards 80, then we're not going to hit that 25,000. But the point is, it's hinged downwards. It's heading towards 20. Rather than saying this is a target, I think it's much more useful to say we've broken out of a rising wedge, which is a continuation bearish pattern in this case. And why I think that is much better to say, much more sensible, is because the market moves in zigs and zags. 1, 2, 2, 3. 1, 2, 2, 3, and that's how trends are going to. That's how trends are going to. So the 2, 3 corrections. The 2, 3 corrections are going to be either rising wedges in a downtrend, they're going to be rising flags in a downtrend, or they're going to be pennants in a downtrend, or they may just be sort of lateral rectangles. But so the classical patterns really just measure the market rhythm. So the fact that we've broken out of this rising wedge is bearish. I think 25,000 is distinctly possible. Whether we hit it or not, I don't know. But 25,000 certainly within range, and possibly further below if, and this is the key, if the momentum deems it so. Okay? The longer we stay under 20, the more pressure is going to be added to Bitcoin. Okay. Now let's take a look at this in a few other. I said there's a few scenarios that may play out here. Well, of course, the other scenario is the double tops, or maybe triple top, maybe some sort of even head and shoulder with a very large left shoulder. If this plays out, well, we get a much more severe measured move to the downside. Okay. A much more measured, much deeper move. So then we're talking about 15,000. Okay, so the topping pattern over here is all even more severe. Now, again, the measured move, I would say, pay less attention to the target, pay more attention to the momentum, because if it hits 20 and then hinges up, the targets are out of play, right? The reason, by the way, that you would have a deeper target for a large reversal pattern does make a lot of sense, because there is a lot of buying and selling that's taking place, and there's effectively, think about it as a battle that's raging here between the crypto bulls, the crypto bears. If the bears win, it's going to break down. If the bulls win, it's going to break out, but it's breaking down. And after so much churning, so we've been churning here since the beginning of 2021, effectively, is that there's just so much pent-up potential energy here, is that eventually the last buyer that's part of this huge topping pattern gets sucked in, and well, then the potential energy becomes, it mutates into kinetic energy, and it gets just pushed down on a much larger scale than a smaller pattern. So that, I think, is quite sort of a way that we can look at it. But now, the other option, not the other option, the other way that we need to look at it is, well, okay, Russ, we've talked about the technicals here. Do the fundamentals make sense in terms of the technicals? And that I think is a huge edge. If the technical analyst can bring a fundamental reasoning in to support the hypothesis, I just think that makes it for a much more convincing type of hypothesis, right? So, well, we do have two parts to the fundamental case here, which we've mentioned many times before, but again, it's really worth repeating here. And we've got the numerator as a fundamental case, and we've got the denominator as a fundamental case, because this, in effect, is it's a dual instrument, isn't it? It's one Bitcoin is valued at $30,500 US. Okay, so if the US dollar is starting to move, well, that's the numerator starting to influence the pairing. If it's the Bitcoin that's starting to move, then it's the numerator that's influencing the pairing. But it's a pairing. It's a pairing. That's what we are effectively looking at. We're not looking at Bitcoin in isolation. We're looking at two instruments here. So you can just go through to the US dollar, and right away you can see that the numerator is putting a whole lot of pressure on Bitcoin, because the dollar is running absolutely rampant at the moment, and there is a economic reason for that. Rates are moving up. Okay, rates are moving up because the central banks are fighting inflation. Higher interest rates tend to support local currency. Not only is that a function of a higher rate regime, we're starting to siphon dollars out of the system. How are we doing that? The Fed is now taking 3 months to build up to siphoning 95 billion out of the system every single month, because it's trying to normalize its balance sheet. Well, if it's taking dollars out the system, well, then it's curtailing the supply of dollars. But if you're curtailing the supply of something, it's becoming scarcer. It's becoming scarcer, and it's yielding. That's the key. It's becoming scarcer, and it's yielding. Well, that seems to be a really good case for a ceiling, or at least headwinds, on the Bitcoin US dollar pairing. Okay, now that being the case, what about the numerator? What about Bitcoin itself? Is there some sort of intrinsic value with Bitcoin? And again, I've often said, I don't see the intrinsic value for Bitcoin. And of course, the Bitcoin bulls would make a case for Bitcoin. And again, eventually someone will be proven correct. Okay, someone will be proven correct. The point is, what is potentially going to support Bitcoin on the numerator side, or what is going to put pressure on Bitcoin? But I'm talking specifically from the numerator side. And I think this is where this standard deviation now becomes very interesting. I just want to make this a little darker. So a few things have happened this year are specifically related to Bitcoin. And then if you add macroeconomics to it, to me, it seems to suggest more headwind on the numerator than tailwind. So the first thing, okay, which on face value sounds bullish for Bitcoin, is that there is a take-up by platforms in terms of accepting payments in Bitcoin. So that sounds bullish, right? So the more that Bitcoin becomes mainstream as a medium of exchange, well, that's got to mean something in terms of intrinsic value. And I would agree with that. The question is, well, how realistic is it for someone to use Bitcoin? Okay, and I would say that the standard deviation, the statistics are distinctly making it an unlikely candidate for transactions. So let me show you what I mean. Let's bring up a calculation here. Sorry, a calculator. All right, here's my calculator. Just move this across. My system's really on a go slow today. All right, here we go. All right, so you can see, so let me just, this is a weekly chart. We're looking at the 20-week standard deviation here. The standard deviation here, I'm talking one standard deviation, is around about $4,000. And this is the value of the Bitcoin. So 4,066 divided by 30,621 equals, well, we've got a 13% variation there. So in other words, there is a 68% chance, okay, there's 68% chance that we deviate from the median. Okay, this is not the median, by the way. Okay, the median would be the average price over those 20 weeks. But the point is, it's a 13% volatility element to current price. Okay, that means that the deviation from current price, I would suggest, is quite high. So would you want to make a transaction when your exchange rate is so volatile? The higher the volatility, I mean, would you prefer to make a transaction, say, in industrial countries currency, or in a emerging market currency? Okay, clearly the emerging market's going to have a lot more volatility to it. Okay, the rand is a perfect example. Just buying off of Amazon for my Kindle, the exchange rate makes it either much cheaper, when the rand's revaluing, or much more expensive when the rand is devaluing. Same argument with Bitcoin. So The other option here is, well, what about Bitcoin Cash? Instead of Bitcoin, what about if we just look at the cash element? What about if there is some sort of cash element for, and there's Bitcoin Cash. Yeah, and Rob's also bringing up Terra, which was meant to be pegged to the dollar, but how are you going to maintain a peg without a central bank? It's impossible. So exactly the point there, Rob. Nice one. Let's just bring up here Bitcoin Cash. I'd like to use BCH USD. I'd like to use our one, FXCMs. Okay. All right. Now, well, we've got a standard deviation here of 45. It doesn't seem as bad. Or hang on a second. Let's put it into percentages so we're comparing apples with apples, right? So we've got 45 divided by 218 equals, well, that's not bad, it's worse. There's a 20% variation either to the upside or the downside. Okay, so the volatility there seems extremely high. But well, what about the dollar? Okay, we've seen the volatility in the crypto. Well, what's the volatility like in the dollar? Well, I think that's an important part of the analysis. So if we bring in the FXCM US dollar index and we take a look here, let's do a calculation in terms of the volatility. So here we've got 202, okay, divided by, well, the US dollar value is 12,783, and that's the FXCM US dollar index. Okay, let's put that into percentage terms. That's 1.5%, 1.6% if we want to round it off. 1.6 as opposed to 13, as opposed to 20%. So the take on of a cryptocurrency as a medium of exchange, it's not a good option, because if you're going to buy something that costs X amount in terms of Bitcoin, and then all of a sudden it devalues hugely against the US dollar, okay, we'd rather just buy it in US dollars. If you're holding US dollars, it's going to be cheaper for you, right? And that's not taking into costs. I did look at the cost. There has been an argument that costs for Bitcoin are excessive. That may have been the case. It may still be the case. However, costs have certainly come down remarkably. So the costs, I don't think the costs are that much of a factor as opposed to the volatility. The volatility makes it almost an impossible currency, in inverted commas, to actually take up. Yeah, and it says the transaction costs are negligible now. So I don't think it's a matter of the transaction costs. It's a matter of, well, is someone going to be prepared to transact in something that's inherently volatile on a day-by-day basis? And I would suggest that there probably will be some take-up, but clearly it would be disadvantageous to do that on a large scale. So for me, the fact that it's gaining more acceptance means nothing unless it's accepted by those that are going to make the transaction. And the fact that it's so volatile makes it highly unlikely that it's going to be used as a transaction, because it's just too uncertain what the ultimate cost is going to be. So that is sort of the one part of the numerator argument, which I think is severely challenged, is that, well, yes, I do see that vendors are accepting Bitcoin. The question is, of course, are the clients and the customers going to be utilizing that? I have my doubts. The second factor is, of course, well, what about crypto as a means of anonymous and being anonymous? I beg your pardon, I didn't get that out. Being anonymous. Well, again, I don't believe that to be the case. We've seen Bitcoin, Coinbase clearly adhering to sanctions, and any sanctioned individual won't be able to use, won't be able to transact on it. The US Treasury is strictly regulating the crypto space now, specifically for strict, ready to see that the sanctions are adhered to. So the point here is, I'm not sure about this blockchain. Blockchain, I think, is phenomenal, the technology. The Bitcoin argument for me, again, I still can't see it. The Bitcoin mining. Well, there is a supply limit to Bitcoin, so that would be another argument. Because there's limited supply, surely that would add an intrinsic value. And the answer to that is, and Coinbase, Coinbase freezing some Russian accounts. Well, the question is, well, just because something is scarce doesn't make it valuable. Okay, the fact that the dollar is becoming scarcer, but the fact that the yields are increasing, that in conjunction makes for a compelling case. Just because something is scarce, well, if there's no demand for it, it makes no difference how scarce it is. Okay, so the idea here is that scarcity is not an argument either if there's no intrinsic value to it. And the mining in of itself, okay, we have discussed this previously, is hugely intensive in terms of the energy, to the point that it's been outlawed in some jurisdictions, and the take on in terms of renewable energy is again a huge question mark to me. So all in all, the intrinsic value here, to me is a huge doubt. Okay, there's a huge doubt. Now, clearly, it becomes more attractive if the denominator, the dollar, is weakening. It seems that the dollar here seems to be a huge influence in terms of the valuation here. So when the dollar is weakening, sure, okay, that means that the Bitcoin may become the demand for it may increase. Okay, so now we add in the extra layer here of the macroeconomic environment. And the macroeconomic environment is dead set, sorry, this isn't the right thing, against Bitcoin. It's dead set. How can I make that? Because it makes absolute sense. Okay, you have to be rewarded for taking risk. Otherwise, it doesn't make sense to take on risk. Every one of us, every single one of us on this webinar has a required rate of return. Every single one of us. Okay, for the amount of risk that we want to that we prepare to take on. Okay, we will need, without a doubt, I can say this with 100% confidence, we need to be rewarded. We've got a required rate of return. The higher the risk, okay, the more reward we demand. Okay, we're not going to, it would be nonsensical for us to take on a risk that has minuscule reward. That's nonsensical. We're all smarter than that. Okay, so the required rate of return is increasing because risks are increasing. Well, if the required rate of return is increasing, that automatically, because of time value of money, is going to put pressure on any asset that a required rate of return is applied to, because the lower the price, the less risky it effectively is, right? So let me rephrase that. In other words, in order for an instrument to convince us to invest in it, if it is risky, it would have to be lower in price. That is its mechanism to compel us to consider it as a risk factor. So if the risk factor is increasing, so the numerator here is highly questionable, the denominator here is highly questionable. Okay, well, if you want me to invest in a Bitcoin, you're going to have to be cheaper, because there's no compelling, there's no way I'm putting money into something that is so high risk in this type of an environment. Okay, the whole market has become extremely sensitive to risk. We're in a risk-off environment. So the Bitcoin is a huge casualty of that. There's no way it's a safe haven. It can't be. So that's what's happening to the crypto markets at the moment. And it's now the question that we've got to ask ourselves, and this is where we'll start wrapping up, is if you are a Bitcoin holder, okay, if you are a Bitcoin holder, you have to sell your Bitcoin at a price higher than you bought it at in order to, you have to convince somebody, you have to convince the buyer to take it off you at a higher price. That's not going to be easy. That's not going to be easy. Not in today's macroeconomic environment. And that can change. That can change, but that's the way it is at the moment. And it's just saying she thinks the energy argument is a false one. It could be, and I would suggest that whilst there is certainly a movement towards greener energies in terms of mining Bitcoin, I'm not convinced that that's the norm. That's certainly, I would suggest, can be improved upon. So yeah, it might be heading towards that greener option, sure, okay, but I don't think we're at a sort of a sweet spot just yet. Rob just saying, Glassnode reckons that 19 out of 21 million Bitcoins have already been mined. So the mining from a supply perspective is less attractive. But it's very the last Bitcoin halving was made it a lot more expensive to mine, as far as I understand. So all in all, what do we do about this? Well, there's obviously two options. Okay, we have to compare how much energy is spent on running the Visa network, for example. No one complains about that. I'm not sure that's comparable. Visa is an active network where transactions are taking place in the billions every single day. It comes down to a cost-benefit type of analysis. It's that just taking a look at sort of taking one statistic and making that work for you. That sounds a little bit like data mining, so we don't want to do that. The idea here, okay. The idea here is so what are the options? Okay, we only want to be buying in an uptrend. That's not happening. So perhaps we need more evidence to see if that is if there is some sort of turn up in trend. Okay. The other option is, well, we could be looking to short any rallies. So that's kind of where we are at the moment. That's where we are at the moment. So the idea here is definitely, yeah, I understand, Anna. So there are Bitcoin bulls out there, and they've got to make their argument. I understand. There's Bitcoin bears out there, and they've got to make their argument. One of the sides is going to be proven correct. One of the sides is going to be proven incorrect. Okay. Obviously, you choose the arguments that make the most sense to you. I'm personally battling to see the intrinsic value here. Any questions or comments? Please go ahead and drop those in. And they're saying she thinks Bitcoin's a very complicated subject. Okay. Rob, I'll keep that to ourselves. Clearly, it's a very emotive topic. That's also something about Bitcoin. It's an emotional instrument. You know, there's the one side and there's the other side. There's very little intersection in between. very little intersection in between. All right, guys, let's wrap up here. Have a great day, and we shall speak again tomorrow. It's like Marmite. Indeed. Cheers, guys.